Hey everyone, it's Allie Coram, Harold Morris here with your option of the day. And today we're going to be taking a look at a defensive stock and a neutral outlook. Harold, I guess that says something about the kind of market we're in.
Yeah, after a strong first quarter of this year, it's not surprising that the market is pulling back and getting a little defensive. So, change strategy, and we're going to be looking at Clorox as a neutral trade using an iron condor.
Okay, great. Well, before we take a look at the trade setup in Thinkorswim, let's take a look at the chart on MarketSmith just to give a little bit more perspective on why we have a neutral outlook here. I mean, you mentioned this is a defensive stock and it doesn't move a whole lot. It's not one of those high octane growth stocks that can have really volatile swings. So that makes this one ripe for an iron condor, that sort of spread of spreads trade where we're expecting the stock to remain within a certain range, or,
Right,
range bound essentially.
right. So it's a very liquid stock. It's a defensive stock, which doesn't move a whole lot one way or the other, either to the upside or to the downside, which makes it an ideal candidate for an iron condor.
Okay, well, then let's talk about what strikes we want to be taking a look at for the Iron Condor. Right now, Clorox is just shy of that 160 level. So now let's pivot over to the Thinkorswim platform. And Harold, we're going to, of course, look at all the strikes for the different spreads, the calls and puts, because there's four legs to this. But first, we
Right.
need to know what expiration we're looking at.
Well, first thing I'm going to do, so I like to go out at least 30 to 60 days. So I'm going to go out to the 43-day expiration that in May. So I click on that, brings up our option chain. And again, we have calls on the left, puts on the right. I always start on the right side on the puts category. And with the nine condor, I usually like to look at around the delta 20, anywhere between delta 20, delta 15 in that area there. So you look at the delta column, I've got a 20 here, so I'm going to start there. So I'm going to sell the 145. It's got a 20 delta. So I click on that. I'm going to sell that. Let me scroll up. And I'm going to buy for protection the 140. Hold my control key down. So there's the put side. So now I'm going to go to the call side because with an iron condor, we're selling two spreads. We're selling a put spread and we're going to sell a call spread. So on the call side, again, I look at the delta. So I'm going to go start here at the 19, closest to the 20. So I'm going to sell the 170, and then I'm going to buy the 175. All right. So here it is. We're in our option in the setup here. So again, selling the 170, buying the 175 on the puts, and then selling the 145. Let me see, that's on the calls, and then on the put side here. And with an iron condor, you want the price to stay within the strikes that you're selling. So we don't want to see this stock go higher than 170, and we do
Mhm.
not want to see it go lower than 145. So as long as it stays in that range, this trade should be profitable. So that's going to give us a credit of 130. So let me lock this in, and let's take a look at confirm and send. So I like to click on that so we can see where our break evens there. So
Mhm.
since we have two spreads, we have two break evens. Keep these numbers in mind because you want to use these numbers as your stop loss, because even though ideally this is a neutral trade, it is going to move a little bit. So one side is going to be profitable, one side is not. As you want to keep these numbers in mind for your stop loss here. So the 170, that's from the call side. The 143.70, that's from your put side. So that's our break even. Of course, we have the max profit, which is the credit received. So now we're going to take a look at a couple of things that we do as we do every week. We're going
Yeah,
to look at the probability of success, and then we'll take a look at how much capital we're going to deploy.
sounds
So
like a
let's take a
plan.
look at that. I click on edit here, and over on the left side here, I've got some notes. So again, probability of success. So the way we calculate that, we take the width of the spread minus the credit received. That's going to give us our actual risk. So it's a $5 wide on both sides. Okay, so $5 wide spread, that's the credit at 130. Our actual risk is going to be $3. or in option terms, $370. So that's our actual risk. To determine the actual probability of success, we take the actual risk, which is $370, divided by the width of the spread times 100. That's going to give us a probability of success of 74%. Again, probability of success is the probability of this stock or this trade making 1 penny or more. So now how much capital are we going to deploy? So we decided, okay, we're going to, based on our portfolio, our risk tolerance, we're going to put $2,500 into this trade. So you take the capital divided by the actual risk, and that's going to give us about 6 trades or 6 contracts. So I need to go down here, change the numbers here, change that to 6. We'll go back over to confirm and send. And you see right here. So we're not, again, it's not going to be close or exact, but it's close enough. So you can raise that or lower that based on your risk tolerance. And then we just click on send the trade away. But again, remember, you want to keep these prices in mind. You want to use these 2 prices as your stop loss. So if it gets down to that level at 143, stock's trading at 158. So it's got a long way to go. And if it goes up to 170, then you want to use that as a stop. But that's a wide range for a stock that doesn't trade very much. So you can go to your chart, put some alerts in, maybe at 143, one at 170. So that way you can be alerted that, okay, this side of the trade is not working out. And then if everything's in order the way you like, you come over here, you click on send, and hopefully we'll get filled on this trade here.
Yeah, bada bing, bada boom. Always important to have that line in the sand or lines in the sand of where you're going to get out with the trade. So good to be aware of those at break even. So we've got a neutral outlook here. We've got a relatively wide range that the stock could trade and still be profitable on this trade. And you're collecting the credit up front, right, Harold?
Right. Getting a little bit of income, and hopefully that stock is going to stay basically where it is right now. And that's over the next 43 days.
Okay, well, thanks so much for that trade idea, Harold, and thanks everyone for watching. If you want more option trade ideas and education too, make sure you check out the Options Trader app from IBD. You can download it from the App Store today, so definitely check that out. Thanks so much for watching, everyone. We will be back here next week with another trade idea for you. Have a great weekend.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.